What up, YouTube? This is Mr.BuyTheDip back here with another video. I want to talk to you guys about long-term versus short-term, which is better. I had a YouTube comment on this, and I just want to, make this a quick, short, simple video. I don't want to get too much into, numbers, balance sheet, income sheets. I want to just let you guys know with the basic to intermediate info, just so you can feel better when investing into the stock market, no matter what platform you want. All right. First things first, I did sell Reality Income as well. Okay, I had $77 invested in this today, right at the beginning. I saw where I needed this stock to be, and I took my money out of here. I had $77 invested. They were giving me back 80. I was up 3%. Take profit, guys, because there's only a couple cycles that this market, in the year that the market's going to give you, and it's going to give you buying opportunities. You got to make the most out of those buying opportunities. All right, so let's go ahead and talk about knowing your style. First things first, if you're a short-term investor, profit margin needs to be well thought of. 8 to 10% should be good profit margin for a few weeks. Okay, what do I mean by that? Well, the S&P 500 is one of those ETFs where a lot of people just buy this and hold it literally for the rest of their lives. They're so confident on this ETF. They're so confident on the stock market. All this ETF does is control the stock market, right? So when we're talking about being up 9.78%, and I haven't did nothing. I just let my money sitting here by, December 2024 is where I put my money in. I want you to look at the buy I did. If we go all the way back to December, right here, I had 4 trades. I just bought the stock, and as the year went on, as you guys can see, I only buy this. I never sell this stock. I might sell this ETF towards the end of the year, but that's all. I'm not really trading this. I'm not trying to do nothing crazy, because there's no point to. There's simply no point to. But if I would have bought at this dip right here, I would have had more return back on my money. But as y'all can see, I'm still up 9.78%. Yearly, the S&P 500 is up 17%. This is way above the average, okay? The average is 10% back on your money. Now, if you know about money, I only have $273 invested. If you had $273,000 invested, you would be getting 20-some thousand. Okay, if you had 10,000 invested, you obviously will be getting 1,000, a couple thousand, right? So the goal is to have more money in general, but in order to invest your money, you need to have that knowledge. What do I need to invest in? When do I need to? Is right now the right time to buy the S&P 500? 100% no. If you want to look for something to sell within the next 6 to 8 months, do not buy the S&P 500 right now, right? As simple as that, And anything can happen in the stock market. I want you guys to know, if you're a short-term investor and you're looking for 15% in a couple of months, you can definitely see that in an ETF. I want y'all to look at this. The craziest thing, I've never seen this happen. So we see a low of 496 in the S&P 500 this year, okay? And then we see a high literally a couple months later. 2 to 3 months later. So 2 to 3 months can make a lot of difference on a stock. Price points can shift, resistance can shift, support can shift. We literally broke support from back in August. 518 got breaking, and everybody was like, oh my god, how low can we go? How low are we gonna go? Well, guess what? In a couple months, we're gonna be back to our all-time high, right? So when you're a short-term investor, you need to be able to be very, very severe with your emotions. You are going to go through losses, but if you're looking for 2 to 3 months, have your stop loss always set, right? At this amount, I don't want to lose any more money, so I'm going to get out. But if you're really confident on the company, be long on the company. Be long. If it doesn't hit in 6 months, go to 1 year, go to 2 year. Keep adding that money. Keep looking at the technicals of the company, okay? So 5 to 7 months, if you're a short-term investor, I would say 20+% will be good for your money. Now, when we're talking about 20+%, I want you to know that you have to be very, very patient and just make sure that that support level is not being broken, because that can happen really, really quick. So I think the buying opportunity was shown this week with AMD. Weekly, they're down. I feel like next week is going to be a big rebound week, because it's 1 week before earnings. This stock is going to get pumped up above 160. But I'm done. I've did my work in this stock. I've made 23% back on my money. I closed that. I'm out of there, right? Unless or until we don't break 150 again, I do not want to buy into AMD. As simple as that, right? You need to stand on what you say in the stock market. You are the boss, okay? That is the number one thing with short-term investors, is you have to be really, really cautious. Because I'm gonna show you guys an example of being undisciplined, and it's only $20. Okay, as you can see, the biggest profit I've ever made was with AMD. I put in about $270 some dollars, ended up with 356. I made like 60 some dollars. At one point, I would have made $77, but you know, based on speculations, I held the stock. But this drop off is scary, right? This drop off could have went all the way down right back to 143. So that drop off, you know, luckily we bounced right back up, but that drop off is very, very, very scary. So just keep that in mind, that taking profit is not a bad thing. Take profit when you have to. It makes sense. That's money that you're getting for free. So why not take it? Keep some money in there for taxes and take it. So when we talk about this is a good way to build additional income, I think dividend investing is very, very good, and also finding small flips. This can be crypto. Okay, crypto moves very, very, very big on short term. So Ethereum, Bitcoin, Dogecoin, this is a whole nother aspect of short term investing. That can move to 10%, 15% very, very, very quick. But when you move up like that, you need to take profit. If I would not have taken profit here and I just would have waited, today could have been the day that could have literally broke my 6 to 7 month hold that I had in AMD. And I would have been sitting in regret. And this has happened, right? So why take that risk when you don't have to? My profit margin was above 20%. So I was simply, you know, I'm going to use this example a couple times this year, because this is one of the best investments I've ever made was in AMD. Okay. I've earned more in AMD than NVIDIA just because I've learned so much in NVIDIA. I want you guys to see that all I did was buy, okay, throughout the year, buy, and this buy literally took it from here. I realized their new chip was really, really good. They have a partnership with Xbox. I'm going to get more than 15% back on my money. Boom, there we go, right? We go above that 130, 120 level. I made my money and I got out. But this was, you know, this thought process was literally planned back here in December. So 6 to 7 months, you can literally be 20%, 30% up on your money, but realize it takes a lot of patience. 3 to 4 stocks is all you need. One ETF, one stock you're long on. Let's get a tech stock in there. Let's get a dividend stock in there, right? And these stocks can build you wealth. As simple as that, right? You can hold a tech stock for 2 to 3 years. Sure, why not, right? But here's the thing of short-term swing investing. That money was made by me pretty much being patient and holding through this right here. This is the craziest month was April. As we talk about the S&P 500 breaking support level, AMD broke, you know, support level and went all the way down to $78. All I did here was I was patient. I realized that this is going to take some time. If not 6 to 7 months, I'm going to be a year to 2 year long in this company. And that is the beauty of investing. You control your mindset. You control what you want to do with your money. Now, when we talk about long term, I feel like you have more of a cushion. This is like a comfort. You know, you're more in your comfort zone because you feel like you got more time, which is good, right? Focus on always holding money ETF though and not pulling out. So compound interest is key. When you let your money build and build, each year your money grows more value. It's like the snowball effect. If you haven't heard of that, let me put that in very, very simple terms for you guys. The more money you have, even a small percentage up on your money is going to be a lot. Okay, so here's what I mean by that. If we look at the S&P 500, okay, and we look at the S&P 500 overall in the year, it's up 17%. But let's look at from 2022. Look at this big dip again in 2022, okay, and all the way to 2025. You guys see how much money you could have just made in three years. Look at this. Even if you bought at the peak of 2021. All right, and you got dropped all the way back down. Look at I want you to look at the COVID scare, okay? The COVID scare was real, right? 2020, 2021, around this time, we seen big dips, right? But if you could have caught these dips and just put 10K and just hold it, right? I can almost guarantee you would have been, up 7,000-8,000 back on your money, which you absolutely did nothing for. You just put your money in there, you went to work, came back, opened it up, open the Robinhood app, opened the investing app 3 years later. Oh wow, I'm making 7,000. All right, let's just take it out, right? But being disciplined is important. The S&P 500 is one of those ETFs where you can just hold, and you don't got to stress yourself out. 10,000, 5,000, but the way you make the money is the most important part first. So what are you doing? Go to work, come back, staying disciplined. Do not, and make sure you're not spending extra money where you're not supposed to be spending. Okay, S&P 500 is another good one. If you want a more aggressive approach and you're big on tech, semiconductors, AI. Okay, look at the QQQ. Yearly, again, it's beating the S&P 500. So when we talk about a safer ETF, a more diversified ETF, we can talk about the S&P 500. But if you want a more aggressive approach, look at the QQQ. I want you to look at this ETF because this always finds a way to slightly edge the S&P 500 and come out on top almost every year, or almost most of the years that I've been around with this ETF. I've been tracking this for very long. I'm holding right now. I do not want to put my money in here just yet, but I'm waiting. I'm just waiting. Now I'm waiting for the right time, because this ETF is, again, one of those ones that's going to make you good money. So long term, the difference between short term and long term is short term could be more volatile. Right? If you're looking for a short-term quick flip, you really need price points. If I'm up 3%, if I'm up 4%, I'm going to take my profit. If I'm not, I'm going to sell at my stop loss. That is the key, things you need to keep in your head. Stop loss, take profit, and knowing when to just stop. If you see the stock you sold at 170 and the stock goes back up to 195, but it's a new all-time high, don't look for another buying opportunity just to catch another 5-6%. You made the money, right? So there's no need to start chasing prices now. Let the price come back to you. Give it a couple months. I can almost guarantee, give it a couple months, you're going to see a big dip. So that is the main difference. But when we talk about good ETF holds, I got QQQ, S&P 500, VOO, SCHD. Okay, now this is a good way to retire as well. When we talk about retirement, financial freedom, we talk about investing. We talk about stocks that are going to keep you free from working for the rest of your life, and it's a nice way to build long-term wealth. And I've been in, I've looked at businesses. I've looked at the amount of stress goes on when you own a business, or when you're working and you own a business, or when you own 2-3 houses and people are tearing the stuff in your houses down. You got to go in there, fix it up after every couple years, right? When we talk about investing, this is literally me just dumping money into 1 or 2 ETFs for 10-15 years, and it is so simple. If your goal is to still work your particular job for the next 15 to 20 years, that is fine. But do realize that at one point, you're going to want to retire by 50, 55, 60, whatever the case may be. And ETFs is the most simple and best way to do it. Grab 2 ETFs, still load up your 401k if you really want to. But if you can just find a good brokerage like Charles Schwab, Fidelity, Robinhood is decent, but I would say Webull, and you find those and you really like, let's say you really like the QQQ. 4 years, let's say the QQQ gives you 11% 4 years, you got 44% back on your money already. And each year you've dumped in, let's say $8,000. Okay, so that is the way to do it with long term. I feel like long term is more calm. It's a calmer way to invest. Short term, you can get quick money on the side. I'm talking 70, 60, 80 in a few months, and you can always use extra money, right? Nobody doesn't like extra money. 80, 70, 60 dollars every and it always depends how much money you're putting in. If your style is more aggressive, you got more money to throw around, you can throw around 3,000, 4,000 even in a safer stock to get that 4%, 5% back on your money. Good, do that. But do realize I always recommend long-term investing, whether you are not aggressive, whether whether you're working a job. At the end of the day, you're not going to be waking up 7 a.m. hustling, going to your 9 to 5 when you're 60, 65. Even if you are, I feel like that's your choice, because you have the option to build wealth at a very young age. Now, can you do both? I kind of do both. I like flipping short-term stocks, because that's where I have the most fun. There's no, there's no point of bull runs. There's no point of stocks running up if you cannot catch some of that profit. And every time I've caught some of that profit, whether it's with AMD, for example, I just closed out my position yesterday on AMD, or whether it's with Walmart, right? I also made some money with Walmart. I want to show you guys. I'm doing like $150. And my last time when I sold at 150, it was 156. Okay, I want you to look at this real quick. June 12th is where I bought $150 worth of Walmart. If we look at this on the yearly, yearly chart right here, we go to June, and here is where I buy $50 worth of Walmart. Now look at this. In a couple weeks, we go back up. I sell my stock, and if we're talking about $100,000, $50,000 being invested, you're making few $1,000s just in a couple weeks. And that is amazing, right? That is one way to make money, and that's one way to have fun in the stock market. So just realize that you can always make side income with short-term investments, but the goal is quick profits from price swings, and it's higher risk due to market volatility, but realize that you can always do both if you're disciplined enough. Okay, here's the breakdown. I'm telling you guys about the goal. One has building wealth over time, one is just quick profits, and then the risk is lower with long-term compared to the risk being higher short-term, obviously, because the price is swinging more and our mind is more towards our money, because we want to flip it in a couple weeks. And if we can't do that, we start panicking and we're losing money, then that becomes a problem. Okay, but the thing with swing trading is I feel like you can always take control of your, when you want to sell. If you don't hit your take profit in a couple weeks and you're really sure on the stock, extend that out another 5 days, another 4 days. You see your backups 10%, 8%, sell. Okay, so my final take is being good at both takes a lot of discipline. At some point you will start looking at some money differently. Okay, so being up 10 to 15% won't be as exciting. So doing both can be stressful, but risk management is very important. Both of these require a lot of skill, a lot of risk management styles, but I feel like the simplest way to do it, if you just want to do long term, get 2 ETFs, dump money in there yearly, and that's it. Okay, S&P 500 diversifies everything for you. QQQ is more aggressive. SCHD, this is for the dividends right here. Okay, I want you to look at this. It's again up yearly only 1%, but the dividend yield is really, really, really nice. Thank you guys for watching.